let's start with just some context for this panel. So over the summer, BeautyMatter published its Q2 2024 investment and M&A report, and the data showed a couple of notable trends. So first of all, beauty deal activity was down 23.5% versus Q2 of last year. So capital has gotten tight. In particular, our BeautyMatter deal index tracked just 16 growth investments. That's the lowest number since we began tracking this information. And for context, the average number of growth deals in the last 15 quarters has been 44. So 44 contrasted with 16. It's a 64% decline in growth deals. So when I say capital has gotten tight, particularly at the growth side of the industry. The other notable trend that we noted was sort of a continued increase in the number of brand failures. In the first half of 2024, the deal index tracked 14 brands that filed for bankruptcy or made the decision to shutter their business. So this was on top of the 28 that we saw in 2023, and it certainly doesn't include the brands that sort of shut down quietly and are, fall under the radar of our deal index. The big strategics and the retailers, too, haven't been immune from a slowdown in beauty growth. Over the summer, L'Oreal CEO pointed to a slowdown. LVMH's perfume and cosmetics division fell slightly short of estimates. And at the end of August, Ulta CEO indicated softness in growth in his projections for the year ahead. And of course, we're all familiar with what's going on at Estee Lauder. It's not all doom and gloom, because at the same time, Target and Walmart continue to point to beauty as a bright spot in their assortments. And certainly we heard from a couple of brands earlier today. Certainly there are brands that are thriving in this environment and are continuing to grow and are continuing to scale. So all of that context was to say that the market is giving us very mixed signals. Here to help us decode those signals is our esteemed group of panelists here. So to kick off our discussion, I'd love for each of you to give us a lay of the land. So what are the signals that you are focused on to help size up where beauty is today in this environment? And where are we going for the next 12 to 18 months? Jue, let's start with you.
Sure. I mean, first of all, thank you for having us. And I won't profess to be an expert, but I think, I've always said I've gone from being the youngest in a room to being the most experienced in a room. So I feel really good. So I can share some of my experiences. I think the insights is the slowdown is more a reflection of expectations and investments calibration kind of coming to a little bit of a sanity place. I think we saw in the past there were a lot of valuation that were outsized valuation. Olaplex included. When we went public, we were outsized. I mean, it was a company doing 285, 300 million, and we had a market cap of 16 billion. The market was drunk on numbers. And then when they came down and it understood what it was, and that's why 2024, 2023 was a much more sanity check year. And I think founders, and again, I really respect all of you founders in this room, because I've told so many of you, it is because of people like you that make executives like us more than what we thought we could ever be. And so as a result, founders were also getting realistic that am I going to sell my business, and if I want to, at those multiples that the investors were not willing to come up to. So I think the slowdown is not that there's no money or there's no interest. I think people are coming down to a more realistic level. The overhang of the elections, people talked about it even 24 months ago. Inflation, despite interest rates coming off, mortgage rates are still high. So I think those are the concerns.
Agreed. Margarita, how about you? What are some of the signals that you look at?
Well, first of all, a little bit of context. I spend a lot of time in retail, and I have probably watched retail. I visit stores every single weekend, and I have been for the last 20 years. I do a lot of social listening, and I mentor a lot of brands. And what I would say is that we're definitely at an inflection point where I'm feeling what you're all feeling. We're feeling the tension. There's a lot of tension. The cost of acquisition is going up. the bar is being raised at retail to get into retail. The margin's tightening up. The fund's tightening up. So for me, it definitely is a back to basics moment. It's a recalibration moment, because the industry is moving so fast, and we're following, that new shiny object and the approach of how things need to be done. But it really is a very disciplined, surgical approach back to basics, back to understanding what your North Star is, being super, super tight, really building and getting to know your customers. But I also think that it is a breakthrough moment. I really do believe that it is a breakthrough moment in every single way, shape, or form. Breakthrough in terms of commerce, retail distribution, new categories, new platforms. I think it's a moment that is that we're all here for.
Yeah. Andrew, how about you? What are some of the signals you look at?
Yeah, I agree with exactly what the fellow panelists have said. I think I also shared the same experience with HydraFacial, with those crazy valuations of 21 and 22. But walking around today, I have sensed a bit of pessimism. Investors telling me, it's difficult to raise capital, founders as well, deal making slowed down. But I'm inherently optimistic, and I really believe in the beauty industry. I've been in the industry 30 years, and I feel this is just a normal cyclical ebb and flow, which you have in any economic model. And actually, when you take a step back, with the data we have from BCG, we saw the market grew last year globally 10% to $460 billion. In that economic context, we still grew double digit. No other category performed like that. Moreover, if the data is available for the US, from the Bureau of Statistics for the last 70 years, if you look at that data, the average annual rate of growth for the beauty industry has been 3.2%. We've survived wars, recessions, a pandemic, and continued to grow. So I think this is just short term, and we will come back strong. And just one thing, what I look at, sorry, because that was a question, which we've ignored. Many of you obviously don't have access to Circana and Nielsen data, but there's so much really good free stuff. Of course, there's the economic stuff from the news, but there's also great free Google search trends. Prosper Insights do a really good report, which is free, looking at future purchase intent, which is good for looking at predictability. And you can also check out all the SEC filings on companies and retailer reports to give you a real sense of what's going in the industry. And many of it's free and easy to get hold of.
Thank you for
answering the question.
for answering my question. Diana, how about you? What are some of the signals you look at?
Since I had an opportunity of running a brand in 2009 in the last downturn, and it actually hit the high-end market. It was Wall Street. Tiffany's in New York had a huge decline because it wasn't getting bonuses for the wives and the mistresses from Wall Street, and it almost didn't survive. But some of the things to look out for that we just wanted to comment, I agree with everything they said, but as a brand founder, I had a private equity group, not the wonderful private equity that we have now that are so into the beauty industry. They had other companies that, like Mervyn's, I don't know if anybody in the room remembers them, but Sun Capital killed Mervyn's, Wicks and Sticks, and little Stila got lost in the shuffle. And they threw us back to the bank, and that bank ended up going bankrupt. So it was really fun dealing with all those men with all that positivity. So I'm just sharing with you that your brand might be being terrific, but look at who is your private equity, what other brands do, what markets are they in, and what's going on. And some of the things I look at, because I'm an avid consumer research person, who's laying off employees? Because that would have been a red flag in 2008 when big companies start laying off, like J&J, 1,200 people. We're seeing store closures. Look at Walmart, CVS, Walgreens, they're all shutting down stores. 7-Eleven, 600 stores. When that starts happening, what happens is budgets get cut. And I've told some of my smaller brands, and that means Gen Z. If you're a mom, Gen Z and Alpha, their budgets are now getting cut, so they're not going to be able to spend as much money. I also follow the real estate industry because it's a really good indicator. Home sales are down pretty much across the country. Thank God we don't have office buildings because they're just underwater. And the other thing is the rental market. Even in LA, we're starting to see a downturn in the rental market. So I'm not saying to be doom and gloom. It's if I should have been more prepared in 2008 to 2009. So when you start to see this coming, really know who is your consumer, where do they live, what are they going through? Because we'll talk about it, but there's opportunities even in the downtime.
Yeah, totally. I agree. Just a quick follow-up. Margarita, when we were chatting the other day, you mentioned that you also keep an eye on some adjacent consumer categories to glean insights into what's going to happen in beauty. Which categories are you watching, and what are you seeing?
So I watch a lot of categories. I'm an observer, and I have been, for the last few years, I've been watching the athletic space, the footwear, fashion accessory, and what I've seen is, I've seen the rise of challenger brands in the athletic footwear space, for example, that have really taken market share from brands like Nike. And what I see is that, this customer are large customers because they cross. They're all beauty customers. They're leaning into lifestyle. They're leaning into wanting to belong to something that adds more value to their life above and beyond product. I would say that customers are getting increasingly more sophisticated in terms of performance. And so that for me is super important. But I've also watched the continuation of social currency and relevance, right, and what that is. So I watched the phenomenon of, as many of y'all did, of the drinkware phenomenon of Stanley, right, the water cups, and I when I saw it happen, I saw it at the beginning. It was just wild how that just sort of became social currency. And so I think that there is, and when I watch the jewelry space, the jewelry accessory space, all these indie jewelry brands that you think, how is it possible that there could be so many of them? But there is this need for self-expression and personalization. And so I do believe that how that transfers into beauty has much to do with understanding cultural relevancy and currency, and how this customer wants to be a part of something more. They either love the founder and they want to be part of this journey with them, or they want to rally behind them, or the part of this community, this level of authenticity, and in a way that they can signal, either through the brand. That definitely carries over across other industries. So I'm very bullish on the future of beauty, for sure.
Yeah. Well, all day we've been, talking about brands that have scaled really, really quickly. And as a result, many founders, some of them, like I said, with us today, have never really lived through a beauty downturn. The last 10 years have been this time of sort of unprecedented growth for beauty and wellness. So Andrew, let's start with you. What are some of the things beauty founders and management teams should be focused on when things get a little rocky?
Yeah, I know. Through my work, John, with both consulting with global companies and founders, probably 4 or 5 things I think we should be focusing on. They'll sound really obvious to everyone in the audience, but you'll be surprised how many times people don't follow them. I think first and foremost, be really focused on your core consumer, really focus on giving them value, launching products on new, better different, and don't try to appeal to everything, to everyone. Really focus on your core consumer and try and build loyalty to get that rate up to 30% repeat rate. I think the second one is obviously, be really cost conscious. Get yourself either a CFO if you can't afford that, a really good fractional CFO. I think really managing costs really strictly and cash flow. When many of the brands fail, it's because they don't manage those two areas well. And this is the time to really manage those costs effectively. It's not the time if you're doing $2 or $3 million to give me or Julie a call to come and be your CEO. I think you have to double, triple hats, which probably leads me to my third point, which is choose your strategic partners really carefully. It's been a big learning for me over my career, but really be clear that you're getting and taking on funding for someone who really believes in your vision, believes in your business plan, because it's really difficult in this environment if you end up with a cap table where 50% of the cap table wants hyper growth and then 50% of the cap table wants immediate profit. It never ends well. It didn't for me, but it's a really important lesson. And those are probably the key ones, and I think those are the obvious ones.
Yeah, and Deanna and Jue, you guys, like Andrew, have spent the better part of your careers as leaders, advisors, and investors in some of the most iconic brands in beauty. In your opinions, what are some of the factors that set the brands that thrive during market ups and downs apart from the brands that don't? Deanna, let's start with you.
Sure. As I can speak from real life experience, when I think it's more of a mindset versus what type of brand. And I can say, because when I was going through the challenges, I met with a real estate investor. And I was like, oh my God, the sky is falling. We might lose our office space. I had to furlough my whole company, which I cried telling everybody, but I recovered. Just everything. And I was laying it out, and he said very calmly, welcome to big business. He said, you don't know how to play the game unless you can do the positive and the good times with the bad times. So he said, you're going to learn what you're made of, and you're going to have to act fast. So I had to work with my team, and we had to make decisions every day because time is not on your side when when the market starts going. It starts going very, very quickly, and it speeds up on itself. So we did a lot of the things that Adrian mentioned about cost cutting, but I brought in my whole team, and I'm like, okay, guys, our creativity, if we've ever had creativity before, now is the time. And we did simple things like our .com, and it's two guys, right, came into the meeting. I have an idea, and I'm like, great. They said, we have excess inventory of 300 pieces, 500 pieces, 700 pieces. It's not going to make a difference, to sell that off. Let's put it in brown bags, and we'll do every week, we'll send out an email that you can get as surprise. You guys, we sold out. And it did so well, we did it for the next 4 weeks. So here is something from my .com guys. Then the next week, my accounting person came in and said, I have an idea. And I'm like, lay it out, it can't get worse. And he said, we get all of this stuff from Staples. You get rebates with your office supplies. People probably don't order it like this anymore, but this was 10 years ago. He said, why don't we take our rebate, we'll go get the supplies and give it to this charity we were working with. Well, this charity happened to be in CAA's office with all the celebrities. They heard that we did that. One of them, a celebrity, posted on Facebook what we were doing. We got a pickup in sales like I couldn't believe. And I just shared these little things with you because that's what made the difference. Changing our mindset, coming into the office saying, we love this brand, we want it to work, what are we going to do? And you know what? no idea is a bad idea, because the other option is you're going to go out of business. So you might as well, it's a time when just throw it out on the table because you have no other choice, and you'll see what sticks. So I think it's a mindset. So I tell all of you that when you're going through something like this, like, push yourself. Just give it your all, because what is the downside? Is you won't have the company. So I think anybody can survive through this, but it takes your grit. It takes all the strength that you have. And your partners are really important. It's funny that Margarita and I are on this panel, because she was at Sephora when I was going through this lovely time, and they could have kicked us out, but they didn't. They kept us in there, and they helped us get through. So your partnerships are important. And one other thing is our operations team came in, and we just focused on our key players, our A and B SKUs. We cut out everything else, but they also had an idea. Deanna, Stila is known for its lip gloss. We can't get all 12 shades. We went to our supplier and said, can you just run different colors on your sample press? Because then we didn't have to pay, 5,000 pieces back then on every single line. We wouldn't have been able to do it. But they did it on the sample press, and we could get all the colors. So it's just amazing what you can do when, times are challenging.
Yeah, thank you.
I mean,
Jue,
Sorry,
you're up.
yeah. It's always interesting because first and foremost, the product has to work. That's the ultimate. Secondly, it is a business we are running. It is not a charity. It is not a passion project. Even if you love it really well, if your numbers and your data is telling you you are not making this work, have the courage to say, I may have to pivot. And during really tough times, like during COVID, all of us been through it, don't think of just yourself. Think of the community that you are serving. Because you started a business to solve a problem and to serve a community of audience. And if you can get that going, it will really be helpful. So I find that what I always watch for is less about what's in it for me, is what's in it for the other group. And on many levels, if you put yourself in someone else's shoes and go after that, your authenticity as a founder, as a businessman, really comes through. And I'll give you a very specific example. During COVID, 50% of Oloplex's business was shut down. We were all in hairdresser salons. So what ended up happening was we asked ourselves, not poor Oloplex, we can't make any money, but what's going to happen to the hairstylists? We created an affiliate program for them, and Lord and behold, they were the ones who stood with us, stood by us, and the other brands followed. And it was great because now the community is well served and the community can stand up. And after COVID, we were all the beneficiaries of the community's support.
Margarita, let's come to you. So as Deanna reminded us, you spent 12 years at Sephora, 3 of them as the chief merchant. How did you and your team know where to place your bets on the brands that would come to define Sephora's assortment?
So it's a different moment in time than today. I mean, in that moment in time, we were able to identify really the white space opportunities and try and fill them. Because we were a retailer at that time that could lead and influence the customer, and today we're living in an entirely different moment. But it very much had to do with, not too different than today, what are we most excited about? Where is the white space opportunity? And the bar was high. As things got more difficult, what was the thing that we just couldn't live without? That we just, that brand story, that founder story, or that product that that would really excite us. And if it wasn't there, if we felt that there was an opportunity, white space, we went out and we would go out and create it. But it always, we're product junkies, Sephora still is, so it always is about product performance, first, second, and third. innovation, imagination, creativity, founder story, all those really basic fundamentals that are really needed today. I will cite as an example, because sometimes we follow trends, and the opportunity for me is to really create new paths. There's too many people, there are too many brands that keep following the running trends, and the opportunities are really to tap into something that's not there. We had as an example, we had brands that were, when we categorized them in a space that were edgy, that we did not feel we had enough of an assortment. We had lifestyle brands, or we had natural brands, or makeup artistry brands, but we didn't have enough edgy brands. And we went out and created a brand called Kat Von D to tap into a consumer, a Latina consumer, for example, or a marginalized consumer that was normally not shopping at Sephora. And it literally was transformative. It wasn't a trend. We just sort of had a hunch, but it really transformed the culture in Sephora and created something that was significant and groundbreaking at the time, for years to come. So I think it's really, getting back to your gut and understanding what really excites you and making those decisions based on that.
And being willing to make a few mistakes here and there.
Yes, fail fast. I mean, for sure it's important to not be so conservative, particularly during those times that you're just in a safe zone. The customer will respond at this moment in time. They'll respond to trusted brands. They'll respond to brands that have credibility and they're hero products. But on the other hand, you still have to surprise and delight. So you still have to leave a percentage of risk-taking that you're going to try something because you don't know. Sometimes your customer, even though you're listening to your customer, doesn't know. She does not know what they don't know until they see it and they react to it. And that was the case with Kat Von D. There was just nothing that would say, oh yeah, this is going to work. It was just a hunch, and it was a home run.
Yeah. Well, we started saying this earlier, and I think I speak for everyone on the panel. These sort of cyclical transitions are really not always a time of doom and gloom. They are a time when sort of the seeds of the future are being planted. So I'm going to ask each of our panelists to quickly take out their crystal balls and to help us identify some of the biggest opportunities that they see coming to categorize the next big upswing in beauty. Andrew, let's start with you.
Yeah, John, I think for me, one of the biggest opportunities I see is this convergence of beauty, health, wellness, longevity, which we've seen after COVID. This notion that consumers have now that health and beauty are no longer separate. And I think that is just going to fuel and unlock a huge amount of growth across the category. Everything from clinical skincare to supplements, injectables, sexual wellness. I mean, there's so many categories. I would say, I do think the biggest opportunity, which we've yet to unlock, but I think the most exciting is AI. I think if we look back to 1995, we were just beginning to understand the power of the internet. And imagine if we knew then what we know now about the power of the internet and things we'd have done differently. Well, I think for AI, this is a 1995 moment. And it really has the potential to completely transform the industry. So that's what I'm really excited about.
Due, how about you?
Just very quickly, I think what's going to happen is brands and products will have to meet the customers where they are and however they shop. And I think putting that front and center will be very relevant in helping brands move forward, even in very tough times.
Yeah, I think we could have a whole panel on distribution and meeting the customer where they are, but for the next event. Deanna, how about you?
Yes, I totally agree. What I see in Young Presidents Organization is we have a health and wellness network, and what we're seeing is companies like MIDI Health, which has telemedicine across the country in perimenopause, menopause. But when you talk to them, they look at your blood work, they talk to you about your symptoms, and then they talk to you about what supplements you're taking, what skincare you're using, what meditation you're doing, where you're working out, putting it all together. Another good example is Next Health. You go and you can get, I don't know, you can get a cold plunge, you can do all these different things. They look at your blood work, and then they tell you skincare that you can use. So the industry is coming together, and I think it could be really powerful. And I'll say this, I'm working on a lot of nonprofits that are really dark, but I always say it's the divine feminine energy that's going to fix the world. And I couldn't find a bigger community than the beauty industry for all of us to join together. And if we all helped each other and became the sisterhood that we should be in everything, we wouldn't have to worry about a downturn because we would all help each other.
And by the way, we could be part of the divine feminine as well.
Yeah.
Oh, can I just say, and men too. My business partner, Andrew Knox, is like the ultimate business partner that you would want. So men have divine feminine energy too. And the beauty industry couldn't be where they get to shine best.
As we have divine masculine as well.
Yeah, for sure.
First of all, that was a 10 for me. I think speaking, piggybacking along, I completely agree on the wellness movement. I think that the wellness movement has such an opportunity to level up beyond how we understand it. And I think it is a complete mind, body, soul connection that customers are craving. So I see this very much in the peripheral. Because we're seeking harmony. I mean, we're all experiencing an existential crisis in the world. And so it extends into the environment. It is, our lives are wreaking havoc. And so I believe that beauty has an important opportunity to play. And we shouldn't fear it. We need to lean into it. We need to just go there. It's not, let's not compartmentalize mental wellness here and active beauty here. No. It's all integrated in order for us to live the best lives, which is ultimately what we want for our customers. So that for me is number one. And the other thing that I would say, and this is a strong advocacy for me, is that I see the surgeons and the need and the outcry for inclusive beauty, diverse assortments that really represent who our customers are. And we're not there yet. We're making strides, but we're not there yet. And then I see the emotion and the need from customers, from our younger generations that want to see this representation. And so as I look into my crystal ball, I see a different world than what it looks like today. And one that represents exactly who we are.
I love it. All right, I think we have time for a question. I see we have one in the back row. Alexander, raise your hand for Charles. There he is.
First of all, that was fantastic. I loved it. I'm the CEO of Ecomundo North America. I heard your stories. I was kind of moved about everything, and I'm so curious to all the panelists. What does resilience mean to all four of you?
Knowing when to give up, that's resilience.
Does anyone else have an answer?
Knowing when to keep going.
I mean, resilience for me is really truly understanding, having clarity of who you are and what you want, what your vision is, and seeing it through. Regardless of leaning into the challenges, but having that clarity, passion, and vision of what's important to you, what matters.
We all make mistakes, but it's how you recover. That's how you.
Yeah.
Yeah,
I agree. I think entrepreneurs are relentless. And so sometimes relentlessness is knowing when to sort of throw in the towel and to take all of the lessons that you've learned, because that's an opportunity as well. But entrepreneurs that succeed are genuinely relentless. And so I think if I have to contribute to the conversation, that's my definition of resilience. Anyone else? Does anyone else have a question? We have a question up front.
Mike.
I love it.
I'm Katie. I'm the founder of Luna Daily. Honestly, incredible panel. I have a question probably for Andrew. So something you said earlier was that you might have a cap table. Be careful of having a cap table where half of them want you to be profitable and half of them want hyper growth. I feel like most of my founder friends would say they all want both. And so what would your advice be?
I think that's where you need a strong board and good executive advice, and if you're big enough, an exec chair to help you navigate that. It's really challenging, but I think it starts with having a business plan which you get everyone to align on. And I'm shocked how many multinational companies and small companies don't have that touchstone of a 3-year plan, because without that, you always leave yourself open to some person saying, well, I thought we were going for 50% growth this year and not 10%, or this much profit. But I think once I really encourage founders to have that touchstone where someone raises questions, you can say, no, but this is what we agreed. And I think if you have reasonable, impatient investors, I think it's important to do that. I had one other thing I wanted to say earlier, kind of linked to it, is I like founders, but it's so important you develop products which make money. And I see so many cases where people are designing products which don't have even a 50% gross margin, and then it becomes really, really difficult to build a sustainable business. And that's where you have these questions then for investors about growth and profit. So really focus on designing products in this environment which actually make money.
Yeah. Very key. We have time for one more.
That was amazing. Thank you, all of you. Linked to Downturn, I have a question kind of about burnout, which often goes the same when you're pushing so hard and resilience, and you go beyond that, and you don't see a way out. Just a question on, I guess, what to do if you are in that space or see someone in that space, and they may want to keep going and get all the way, and the vision is there, but how to help yourself or someone out of burnout?
I think first of all, you really need to know your business. Like Andrew was just saying, if you in beauty, a lot of people always sort of say, this is my selling price. Your gross margin, your expenses, and they're all coefficients and ratios. If you find that after 5-6 years, you cannot make the gross margins, you cannot meet expenses, and you keep bleeding, no one is benefiting. And I would say it is better for you to make the decision, do I pivot or do I continue? It's better than, say, some investors coming in and telling you, I'm going to buy you for pennies to the dollar. The number of businesses that I've seen happen is just unfortunate. And sometimes you run a business for yourself. You make a good living out of it, you pay your people well, and you don't have to look to exit. And some people build a business to exit. But unfortunately, today there are too many brands who are focusing on that, and so you have products that are really not that great. I mean, the number of products I've seen that if I close my eyes and just look at the descriptor, I have no idea which brand it is. And that is your litmus test. If you cannot tell that it's a brand that is differentiated, then you are in a space that you should not be in, because you are in just because everyone is in it.
All right, well, thank you so much. You guys are truly the oracles of beauty, so thank you for sharing all of your generous knowledge with us today. Thanks again.